Welcome. Welcome to module 2 of cashflow business cashflow systems. And I'm glad that you are able to join us. I'm glad that you're able to join the training and to learn together with us about cashflow systems. I hope you have been able to attend or also to listen to the recording in case you are not able to join us live in class for module 1 with relation to cash flow systems. And we have learned a lot of things. In module 1, we did the introduction. We were able also to understand why people are not usually able to control cash flows in their businesses, and even with the aspect of you just thinking that this is your business and so you are not answerable, you are not willing to be accountable, you are not, you don't feel like you have the dedication to follow the structures, and you feel like if you have employees or you're working together with other people, you feel like they are the ones who are supposed to do this. And so it's very good for us to understand that we are the first people who are supposed to be accountable so that everyone else can follow suit. So if you need them to be accountable, if you need them to deliver the receipts that you trade every day, if you need people to get to work on time, you first have also to be dedicated to that work. As much as you are the boss, as much as you are the one leading, it's very good for you to understand that you are the first, you are the pace setter, regardless of how many things you may tell them in words. You are the pace setter, and so you have to be dedicated as the first person. So in module 2, because of time, I decided to break this into sessions so that the introduction we can have it in the live and even in the recording for those people who are not able to attend. But we can have now the breakdown of what really happens or what really is involved in cash flow systems. What structures do we use? What accounts are involved? What do you need to be keen at? What do you need to recognize? Where do you need to be sensitive? Which accounts do you use so that you can be able to track your cash? And this is what we will be doing again. So my name is Grace Moroki, and I know this is going to be another beautiful ride for all of us. So you're welcome. And as I said, before you listen to this module, make sure you have the introduction from module 1. Whichever way you do it, it will still be fine. So part of the points I want us to note in this training, or in module 2 rather, is that cash flow transactions are done through ledger accounts. So when you hear accountants, because part of the main reason I've decided to teach business people accounting and cash flows and soft skills is because for example, as me as an accountant, I can come to your office and scare you with a lot of vocabularies from the accounting field, but in actual sense, it's not like they mean something that complicated. It's not like it's something that you can't understand. So part of it, when we talk about ledger accounts, ledger accounts are just it's just like a table which has two sides. So one side represent money that is coming in, and we usually call that side a debit account. And on this other side, represent money that is going out of your business or your bank account, and we usually call it a credit account. So ledger accounts, they have two sides, a debit and a credit. The other way, the other thing I want you to recognize is that each ledger account has an opening balance and a closing balance. So when an accountant comes and tells you, the balance brought forward was 300,000. In simple terms, they are just telling you that the money you had in the beginning before the period of transacting started was 300,000. It's just the beginning balance and the ending balance. So don't be scared by the terms. They are just the terms we use when we are explaining ledger accounts, but they are not supposed to scare you as a business person. And this is part of the narratives that I want to make clear to business people, so that you don't get scared when you hear like an auditor is coming to your office, or an auditor is coming to audit your books, or uh, you get a letter from a certain institution or even from KRA, and they have used these huge words, and you're wondering what is happening. Then the other point to note is a list of transactions, each recorded as either a debit or a credit, as I said, in separate columns. So we only have two columns. So one column has a debit side and the other a credit side. So one only represents the money you received, and the other one represents the money you spent, and then the closing balance, as I said prior. So don't be scared by these terms. They are just it's like you having a lawyer in your office, and all they are telling you is that you have been sued, but they use like three sentences with very huge words, and you feel like you have been cornered, and you get scared, like you are going to be in the cells in the next minute also. So let's continue. The ledger accounts, in the business ledger account, you need to note that a debit is an asset, while a credit is a liability. What do I mean by this? A debit, as I said, in your account, it means that you either sold, for example, you made a sale, so you are going to debit your bank account. That means you have an increase of money inflow into your business. And a credit means that you spent some money, either you bought something or you incurred an expense. So when someone says debit, it means just increase your cash flow. Just realize that you have more, you're expecting more money to come in, or you already have the money in your bank, or you already have more cash in your till, in your pay bill, because nowadays things have changed, and we have so many other channels of receiving money. And when they say it's a credit balance, as long as it's in your books, it means that you spent some money, and you need to be very alert to understand, why did I spend that money? How much was it? Was it something that was it a need for the business? Does it add anybody to the business? Was it worth spending? And is it going to bring back any return to the business, or I just spent some money and I lost everything? Then the other point I need you to note, and take this very carefully, in the financial institutions, that means in your bank account, in your circle account, in your insurance account, or what have you, in your whatever, as long as you are dealing with the financial institution, in their ledger account, a debit means the opposite of your account in the beginning. A debit means that you withdrew money. That is why, if you have, for instance, nowadays you have the chance to link your bank account with your phone, so that any transaction that happens to your bank, you can receive a text message. So if they say you receive a message from the bank, and they say that 10,000 shillings have been debited from your account, it means that money has been withdrawn. So if you had not approved any withdrawal, remember, we are talking about cash flows, and people I've been dealing with business people, and they're asking me, Grace, where is my money? I invested money, I can't see it, I can't tell what happened, I can't track all my transactions. Don't make an assumption. Make sure you are linked with your account in whichever way possible. Follow up, even if you receive like 1,000, as little as 1,000, that it has been debited from your account. Follow up to know, why was money withdrawn from my account. And remember, I said, in your own books, or in your own records in your business, a debit means that you have received some money. But in the banking account, a debit means they have withdrawn your money either to pay a client, either you withdrew it via check or something, either you have given them authority to maybe set aside some amount of money to pay for some expenses on a monthly basis. For example, maybe for insurance, maybe they can debit your account and cater for some savings here and there. Maybe they can debit and repay some loans that you had taken from them. But if it is not something that you approved as a person, do not make an assumption. And here I'm going to talk. I hope this won't be very sensitive. I'm willing because I've worked for over 10 years with private businesses that are owned by and run by family members. Maybe a father, a mother, and kids who are already grown or something, or maybe a relative, a close family member. Let me tell you, if you are not keen as a director, you lose a lot of money. I've seen people who have been given authority to go and withdraw money from their accounts. They go and withdraw and they do their own things. But because they are your daughters, they are your sons, they are your cousins, they are your close relatives, you are not that cautious, you are not that careful. You are like, if it's me, you are like, Grace can't steal from me. You say, Grace can't lie to me, Grace will take care of that, so and so is going to approve. But what you don't know is that the first step for you to lose your cash flows is that person who is very close to you, who goes and instead of withdrawing 100,000 shillings from the account, they withdraw 105. So if in a week they go and withdraw, let's say even twice a week, money from your account, you're going to lose 10,000, because if they were supposed to withdraw 100,000 and they manipulate the figures and it gets to 105, and because you trust them this much, because they, of course, they can't steal from you, according to you, you just approve, you just sign out checks and you allow them to go and manage the cash flows. So they will withdraw 105, 5,000 on top. So if they do that twice a week, you will lose 10,000 shillings. And then the next minute, you have expenses that are related to the business and you need 10,000 to sort them out. And then you go back again, whereas you already lost 10,000 shillings in terms of withdrawal because you entrusted yourself to someone. So I'm not saying you don't employ or work with your close people or close relatives or your relations per se. I'm only saying don't be ignorant. This is the first place where most cash flows are lost by private businesses. And I'm not even scared to say that because I've worked with them. Um, you can't caution or ask them the questions, and especially even as a consultant right now, as I see it on a daily basis, but you can't ask them because by the end of the day, if it's like maybe it's the kids who withdrew and they consumed, this is apparent, the money belongs to their mother or to their father, so you can only tell them it looks like your account has been overdrawn by 50,000. But you see, that's where it ends, because by the end of the day, this is just a family, but you lost. Then the next moment, you are there wondering, where do I get the cash flows to jumpstart again my business? What happened? Where is the money? If for example, let me use those people who supply tenders and such supplies and everything now, the magnitude or the margin of profits in those sales, it's not usually huge. It's like just 10%, 20% and everything. So if the cost is 100,000, it means if the profit margin is 20%, you are supposed to earn 20,000 from that supply. So, oh, and you, if again you lose 10,000 because of mismanagement of cash flows, because you have entrusted your cash flows to someone and you are not treating them as employees, by the end of the day, it will just end up like you only made half of the profits you expected to make from that. sale. So be careful. I have nothing against you employing them. I have nothing against you working with them. I am building my own empire so that also my generations can come and fight something. They don't have to go through the hassle I've gone through to settle in life. But again, let's put up structures. And let me tell you, structures is not just about a system. It's not just about of you having learned QuickBooks and everything. As I will be talking about that data at the end of the cash flow systems training. But the structures that are messing us up in our businesses, most of them are part of us. It's you having those employees that you don't even check whether they came to work, whether they brought back the change when you sent them to go and buy something from the supermarket. You lost 200 shillings on a day. You all those things because you are like, it's okay, it's not much. Someone else will ask for it. If you don't become strict as a business person, if you don't pioneer the system that you want to see, you will lose everything and your business will go down because that is the uh, ultimate add to it in case you're not careful. So I'll be discussing about different source documents that we use in cash flow systems. At least we discussed about that, and it's a good thing to mention because that is what happens in private businesses. So source documents that we use in cash flow systems. If you want to track your income, number one, income is one of the main accounts we use in cash flow systems or to record our cash flows. So, how will you tell how much income you have made in your business or in whatever, even if you are employed? Because I know there are those people who will be listening to this recording and they are in employment. They just need to gain an understanding of what happens in cash flow systems and to just grow their skills and to increase their knowledge. So part of the source documents, and I've generalized this because there is a wide range of businesses, but generally this is a summary of the main documents, source documents that we use to record income. So number one, it is cash sale receipts. And this one is a huge one. I said before, I've worked in private businesses and I've seen the drama that happens with cash sales. Because especially for those people who are using manuals to record sales, if you do it manually, you have the cash sale receipts. If you are not careful, let me tell you, and I'm not here to fight any employee or to give even those who will be listening ideas of what the ways they can use to steal from their employers. I'm here to align systems. I believe in integrity. I believe in values. You have to be a person of integrity. I've seen businesses where uh, the owners of the business because they use manual systems or manual booklets to record their cash sales, and the employees went and bought their own cash sale books. So as you record, when you are there, they use the cash sale book from the business. When you are not there, or once they learn how you run your business and that you're not that strict, you never check, you never keep track of your stocks, because that also another thing that causes us. So you'll never know how much stocks you had. You only rely on them to tell you that we have no more stock. So they will record some cash sale receipts in their own booklet and give to the client. They would also record some in your own booklet. So by the time you're earning 200 shillings, they also have their own 200 shillings they have earned. And unless you're very careful, you will never know about it. You will never know about it. I'm going to mention about the current upgrades by KRA on e-teams. Part of it is good because they are forcing people to record officially from the system the sales they do. It has a backlash again on you as a business person because it might get you paying more taxes, because if you don't, you are not able to get the receipts to claim your expenses, to claim your purchases, again, it will have a negative effects on your business. But if they, I'm thinking if they only concentrated on the receipts part and allow us to claim the other expenses and to take control of the purchases sector, it would have been a very good move for even the businesses to be able to track their cash sale receipts and everything, because it means no client will live here without a receipt. And you see, the employees cannot go and register their own system with your PIN. The moment it has been registered, it has been registered. But again, on the other side, I'm saying it will have a very it will demand the business people to dig deeper to their pockets in terms of tax payment and everything. And maybe we'll be looking at that and see how that goes and what happens in it, because it's a developing system from the taxman, and we are in Kenya and we'll see what is happening. Then the other source document you can use to record your income is the bank checks receipt. There are those people who trade with clients who pay in cash, but they never give you cash money. So they will give you bank checks. You have to go and deposit. Some of them give you um, uh, what do we call them, post-dated checks, and you have to deposit them at some point. And if you don't have a good recording system, if you are not able to keep a good track record of what is happening. And that's why I usually say maybe I'll be going ahead of myself, because one of the main things that we teach in uplift management concerning basic business accounting is you having the skills even to operate an Excel worksheet in a good way, in a way you can record your transactions, in a way you can be able to tell that this client owes me 5 invoices. They have been able to pay one, the other one is due on Monday, and you can be able to tabulate and come up with a worksheet that you can record data. You can enter your own data there and you're able to track. And even for those people who are in employment, you're able to track the happenings in the business if you're in the accounting department, so that you don't get late on corrections, you don't get late on payments, and you're able to have hands-on data. I've worked with private businesses, as I said, and even when I was employed, one of the things that my employer loved is the fact that if he asks you for like how much does this client owe us, you have it in the fingerprints. And I think every business person here, that is what they want. They don't want to work with people who have no idea of what is happening on a daily basis. They don't want to work with people who have no idea of what is going on. They just woke up, came to work, they expect the day to end up, and they go back home and then they are paid. So it's good to have track of what you have received in terms of bank checks, and you're able to record them and understand when they are uh, they are becoming varied, so that you can go and deposit them and receive the cash on the other hand. And you also need to understand, if you received prostituted checks and you are supposed to deliver some goods to a client, um, did it happen? Because this is part of what affect our cash flows. Let me tell you, there are those employees you will have, and they never delivered the goods, and then the client calls back later, I paid you, you didn't deliver, and everything, and all these messes happen. So it's good to have a good tracking system, so that you don't lose your cash flows. Because if you had given your employees, maybe for example like fuel, to go and deliver something and they never delivered, and again the client demands that you deliver again, it means you are going to incur cost in terms of fuel twice, and you need to get an understanding what happened, because these are the ways that we lose cash flows, and we never sit down to ask ourselves, what can we do about it, what can we do to stop this, what can we do to make sure that this doesn't recur again in our businesses. Then we use also the bank and till pay bill credits and everything, because nowadays we have a channel. Even in this training, there are those people who paid by a till, uh, rather than those people who followed the registration link and everything. And it's okay because that is where businesses are. And it's also good for you to upgrade your systems. If we are in terms of like now people are more comfortable doing mobile banking and everything. You don't have to record even a till number or a pay bill number directly from the mobile banking providers. Even banks have those links nowadays. So you can just go to your bank, tell them to link your account to a mobile payment links, then they can give you the number and you can have it so that you also don't lose business. You need to grow with the system. You need to understand what is happening in the business world because it's either you join them or they will kick you out of the field for your stagnation. There are those people who have been in business for so many years and they are still not willing to change or still not comfortable understanding what is happening currently. They are still comfortable in their own spaces and they are not ready to break out and run new things. There are those people. I've worked with people in business who started businesses when business was totally run from a manual perspective. So they understand all the invoices manually, they understand all the files manually, and they understand everything. There is nothing they can forget. But right now, when someone tells them, send me the invoice on email, they don't even know how to operate their email addresses. They can't even format a document, a simple document. And that's why we also teach our soft skills in basic business accounting because it's not just a matter of having negotiation expertise and the skills. It's also an understanding of what you can do to grow your business, and it's good to grow with the time. So the other source documents, I think I'm explaining, and it might take us a bit. Let me see. It's the credit invoices. These are the same like cash sales, but these are the invoices you give to those clients who don't pay in cash. Now, there are those people who invoice clients, they don't record it anywhere, and then 5 6 months later they are like, I sold some goods to this and this kind of client. Did they pay me back? Did I issue the invoice? What happened? And the people have lost cash flows because by the end of the day, you incurred the cost to go and buy those goods, you incurred the cost to go and deliver those services. But if you don't demand for the payment, if you don't have a record to remind you that you need to go and demand for payment of your services or goods from the client, it means you will lose the cash flow in terms of cost, and then you won't earn any profit from it. And then by the end of the day, you have lost everything because your business can't run, but it's because you don't have a way of tracking the invoices or the sales you have done that were not paid in cash. Then we usually have debit notes. These are notes that we usually issue to those people we already issued invoices to, but we need to increase the invoice amount because maybe we added some goods to them or we provided some extra services to them and we need to charge them extra. Or the other option people use is you can cancel the original invoice that you had issued, and you can reissue the invoice afresh inclusive of the new cost. Then we usually use the deposit slips. These are slips that you have received checks from clients. You didn't have to go to the with the check to your office. Then this the evidence you have that you deposited that money or that client paid, so that you can also be able to clear them from your list of debtors. It's the deposit slips, and it's good to have that in mind and in recording so that you also don't demand amounts from clients which have already been paid. Then there is the interest income as a source document. There are those investments you have made, maybe in dividends, in shares, the investments here and there. For those people, yeah, all kinds of things. So you need to understand how much interest income you want during the year or during the month so that you can be able to record that as an income and recognize it as an income directly to the business. But if the interest was paid to you as an individual, as director, and the money you used to make that investment is not related to the business. We said initially in module one, separate yourself from your business. So if the interest is for you, stop bringing that money into the business to cover up. Even if you are investing as capital, first find out how is the business doing on its own without using your resources. And again, even the dividends that you treat the same like the interest income, and even the assets gain, that these are for the those assets you can dispose with relation to the business. They belong to your business, you are using them normal, and you decide to dispose them. So that gain, as long as that equipment or asset was owned by your business, or you bought it, it was being used to generate income for the business, the asset gain, again, we record it as a source document for income with relation to business. Now, I'm going to summarize this about expenses, because expenses are uh, sorry for that hitch, it was the internet. Now, we have different categories of expenses depending on what kind of a business you do, or depending on the sector that you are in. What I would want to put emphasis to with regard to the expenses and the source document, most business people make an assumption that some of the expenses that they incur with relation to running the business on a daily basis, it's not, they are not supposed to be recognized as business expenses. For example, you have a car, you fuel it on a daily basis, but you usually fuel it to go to work. So on a daily basis, you incur a cost or an expense that is related to you going to see your clients, that you going to look for more business, you go for marketing, you going to work, and they assume that this is a direct expense to them as directors. Unfortunately, as long as you are incurring that expense with relation to your business, you are supposed to charge that expense to your business. And I said that generally so that you can also be able to go back into your mind and ask yourself, what are the kind of expenses I incur on a daily basis as a director, as a business person, and I never think that I'm supposed to charge them into my business. And on this one, I'm not doing the tax training right now on this one, but it's good to mention with the new e-teams system that has been introduced. What they are saying is if you need to claim these expenses from your income tax charges and everything for the purposes of tax, that you'll need to be getting eating invoices from your suppliers. That means if you go and fuel your car, make sure you get a receipt, and not just a receipt with a barcode that has been processed through eTIMS, and so that you can go with it to your office and you are able to claim, because there are those details we use when doing things like VAT, and now they want to proceed and introduce it in income tax, that you cannot be able to claim that expense unless you include the data and the invoice numbers and everything they have used in the system for the purposes of claiming your expenses. So I'll go through them together, but generally I've said take note, do not assume any expense. As long as you incur it and it is valid for in relation to your business, as long as you are not exaggerating, because again, you don't go and do things and exaggerate just because you're being given a rebate to go and claim it against your business income. It's good to note that and to be very careful so that you also don't lose a lot of cash flows, because the moment you incur that money and you don't claim it against your business, you will look like you're making a lot of profit. But on the other hand, there is no profit. The expenses are very high. So part of them, as I used fuel as an example, salaries and wages, the utilities details, those water bills you pay, those or electricity bills you pay. The internet nowadays, people are using the internet, airtime subscriptions, and they never think that these things are supposed to be claimed against your business. And they never think that these things are eating into your business cash flow. because you went and withdrew the money or you consumed the money that you earned from the business. So according to the records, it reflects like you have made a lot of profit, but you don't have money in the bank. So where is the money? It was eaten up by the expenses that you have incurred on a daily basis as a director, as a manager, and you need to be very careful about that. General troubles with relation to the business again, if you go, for example, right now you enrolled for this training and maybe you paid some subscription to it, or you have paid some subscription to go and gain a training, a director's or an executive training somewhere, charge it to your business, because the knowledge you are going to use it to improve your business. General maintenance, rent, advertising charges, office supplies, the cost you used to buy the office chairs and everything. Take note of it. Legal audit fees, you have right now we are in the season of audits until maybe June because of the financial year that ended 2023. You need to take note of those fees and charge them against your business. The telephone cost, the amount you use to buy credit on a daily basis or on a monthly subscription, take note and charge it as an expense that is affecting your cash flows in your business. The internet cost, the licenses, right now we are in that season, monthly taxes, and company statutory expenses. On company statutory expenses, I wanted to you to take note. Most businesses, they do not recognize that they incur statutory expenses in terms of, yes, the statutory expenses are deducted directly from the employee's account, and so the money that is paid with relation to pay as you earn and SSF and everything, and HIF has already been deducted from the salaries, because the salaries we captured it as a full figure, but what you pay to the employees is less of the deductions. But unfortunately, you need to remember, for example, for NSSF, NSSF, there is a company contribution, there is an employee contribution. So if the employees contribute 20,000, remember 20,000 of your business cash flows are going to pay NSSF as a contra contribution by the company to your employees account, and people don't remember that this is part of business cash flow. So every month, remember that you're going to incur that cost. And even right now, when the government had introduced things like housing levy and everything, take note of those small things. Those people who are doing, who have registered their employees for pension schemes and everything, remember those costs affect your cash flows. So you'll be looking for money, you're wondering, I can't locate 20,000, 30,000. And in actual sense, it is not like someone stole from you. It is because you paid those statutory deductions and you had to give part of your money, but you didn't record it anywhere. And the others, as I said, stationery and everything, you need to just put some emphasis, depending on the kind of business you do, depending on the expenses you incur on a daily basis. For those people who sell goods on a daily basis and they have to deliver them through motorbikes, through transport, and ferrying them, and using like delivery transport, even the transport businesses, and you pay them 200 shillings to go and deliver a parcel for you, maybe in Nakuru. By the end of the day or by the end of the week, you have used 3,000, 5,000 to ferry those goods. So you need to take note of those small things, because those are the things that eat up your cash flow, and you don't record them somewhere. You don't recognize that they are affecting your profits. Right. So the other source documents we are going to discuss it's source documents that affect the cash flows of our account with relation to cost of goods of account. So this is more related to the expenses, but now for those people who buy goods in bulk, for example, from suppliers. So the suppliers invoices, you need to keep a good record of them, because they are going to determine how much money you are going to pay to suppliers. I'm usually surprised sometimes when business people are asking their suppliers, how much was it? How much do I owe you? And I'm like, you received goods and you don't remember the cost. You received goods on and you don't have a copy, your own copy of the invoice. So how are you going to claim that, even with relation to VAT now, to the income tax and everything, if you're asking your supplier to give you the details? Take note and put up put up and come up with good structures, even if it's just manual through Excel, as I said. And those are skills we teach you even in Uplift through the basic business accounting skills. Learn how to enter good records and to clear them and to transition them so that you stay up to date. Then check payments that you have made to clients. These affect your cost of goods because they are those clients you'll buy from, and they tell you you have to pay in cash, or you have to give them a check that is valid for today. And it's good to take note of all those details because they affect your cash flows. Then the bank until withdrawals. This one is a huge one. I don't think I can explain everything right now, because this is where a lot of cash flows get lost. Because you are the director, because you are the manager, because you are the everything, you receive money because of the payments you received because you did business and everything. And on a daily basis, you have a checkbook either in your purse or in your car or in your pocket, and you pass by the bank every day and withdraw money. Then the moment you withdraw, we are talking about cash flows. You don't even have a book where you record that today this is what happened. I withdrew 200,000. I sent 50,000 for so that we can buy more goods from this supplier. Then the next minute, what do you do? The electricity bill at your home, you pay it through using the same business money. Then the next minute, what happens? What happens? Someone calls you from your family and they are in trouble and they need 5,000. You set them via M-Pesa, and so on and so on. So by the end of the day, again tomorrow, you go back to the bank and withdraw. Then in a month's time also, even if you had done this huge kind of business, you don't even know where the money is, you don't have any savings, and you can't tell us even what happened. You don't even have a record of the things you did. And even worse, for the money we have received from financial institutions in terms of loans, this is the same thing we do. You receive money from the bank, and because you are supposed to scale up your business to store to bring in some more stock, you now have money in the account, and because you have just forgotten that you had cash flow issues, you withdraw the money. Yes, you restock, but you don't restock that seriously. You just buy some few goods here and there. And by the end of the day, in a month's time or in 2 months' time, you don't have cash flows again. And remember, on a monthly basis, you have to pay back the installment and the interest. Then you sit down and start asking yourself, where did I take the money? What happened? We have seen people being auctioned because they mismanaged their cash flows. When the bank gave them loans, they redirected the money to some other personal issues and everything, but they had told the bank that they are going to use the money to put up some good structures for their business. They are going to increase the stocks, and so all those promises. So take note of that. So the other details are the cash purchases, the receipts you get from those clients you buy goods in cash. Take good record of them. Credit notes, again, take good note of them. Then credit purchases, as I said, take note of every receipt that you are given anywhere because you incurred some cost with relation to the business, because these are the details you are going to use, so that if even if you had earned in a month, let's say like 300,000, and your profits were 60,000, so what happened? Where is the other money? we need to see a narration of what is happening. And that's why even when your auditor comes, actually most private businesses, they don't even go through the actual audit. Let me just say that because that is the truth. They only tell the auditor, I feel like I want to pay KRA 20,000. Then the auditor figures out maybe you incurred a fuel cost of 50,000, maybe you incurred transport cost of 20,000 and everything, because you don't even have records to prove it. And it is very sensitive. That is why I am teaching you how to do cash flow structures and systems and to record your transaction so that you also don't stay in an assumption kind of life. Learn your business as a pro. You don't have to be an accountant. You just need to be a business person who is determined to make it work, to grow your business and to bring it to the right level that you desired. Now, what we have talked about, let me just go back again. We talked about the income, we talked about the expenses, and the cost of goods. I've gone back because these are the accounts we use to prepare the profit and loss statement. So when you ask your auditor or your accountant, or even when you're asking yourself, because now you are knowledgeable, how much profit did I make out of that thing? These are the details you need. You need to understand how much sales you made, what was the cost of goods. The cost of goods is the purchases and the cost you incurred to bring those goods to where you are, or the cost you incurred to offer those services. Then the operating expenses. If you incurred some transport costs, some fuel costs, some internet, some what do we call it? The coordinates, the telephone cost, and everything. Those are the operating expenses. Then what remains? That is what you usually ask your accountant. What was the profit? All did I make any profit? Did I not make any profit? It's not something complicated. It's not something huge. You only need to understand the accounts and how they are used. So uses of profit and loss statement, as I have said in that discussion, to measure up the magnitude of business we have traded in a month. If you want to tell how much business you did, was the business good? Were we doing too well? Is it down? Is it high? Look at your sales, and the sales figure you will find it in the profit and loss statement, and that is from the records we discussed about in the income records. Then the cost to control cost incurred during while doing business and come up with control measures. These are the purchases, and we have discussed that in the previous sheet. Then to control the magnitude of operating expenses, you need to understand if the actually, let me just go back and show you something. There's something we call the gross profit. This one here I've written as 1 million. Now, there are those people who make some good sales. There are those people who their cost of goods or the purchases cost is very low, so they have very beautiful margins of the money they made from. In case there was zero operating expenses, they would have made this 1 million. Unfortunately, when it comes to operating expenses, and these are the details I have captured here, this is where everything messes up. So there is a lot that happens. There's a lot of manipulation of figures even from your employees, because you are not able to control to understand if what they are telling you is true, because maybe you have rented an office that the cost is very high, and maybe just across where you are in still a beautiful place there is a cheaper rental. Maybe you have incurred a lot of expenses transporting those goods, and maybe you would have paid uh, this courier delivery services so that they can deliver the goods to you. You can look into that, because operating expenses come to eat up our gross profit, and the net profit. This is what we take to our bank. is determined by the magnitude of operating expenses that we incur. So be careful, control them, don't assume things. Be very sensitive. Those are the things that eat up a lot of our cash flows because they can be manipulated. Some of them don't even have receipts and everything. So you will take people by their word. And remember, I talked about especially those people who are very close to you, even in relationships, and you're working with them. For those people who are working together, a husband and a wife, it gets to a point I think it's very hard. Um, yeah, I don't think it's easy. And you can't ask maybe your husband or your wife, where is the other 50,000? So you keep quiet, but remember that money was supposed to grow your business and not to be consumed by one person. So the other uses of the profit and loss, I've talked about the operating expenses. That's why I got into that. Then to get rid of unnecessary expenditure in the business, again, that is what I've said, so that you measure up and understand and figure out what is not working for your business so that you can get rid of it, or maybe just reduce the magnitude. Then you compare the performance of the business during different periods in time. You can do even a profit and loss analysis for your business even on a weekly basis. What magnitude of work did we do this week? What magnitude of work did we do last week? Which week was better? What can we improve on? And you can be able to compare all those things. Even on a monthly basis, on a quarterly basis, you have the freedom to do all that as long as you have information. Not because you, I said, not because you want to become an accountant, but because you are running a business and you are the one who is the driver of that business. So you need to understand how things run. Then to assess the amount of tax payable from the business, tax is charged on the net profit. This one. So like in Kenya, 30% of your 600,000 in this scenario will be paid to KRA as income tax. So you need to be very careful on that. Then I'm going to pass through this one very quickly and we discuss the balance sheet or the statement of financial position. And as the name indicates, this reflects the financial position, worth, or value of your business at any one point. So remember, or take note, we don't measure the value of a business from the profit and loss statement, the one we discussed earlier. Profit and loss allows us to see the magnitude of trade we have done and to take some assessment of the profit amount we have made in a certain season. So what we use to measure the value of the business, it is the financial statement or the balance sheet. And yes, that is what we use because it is what holds some details. Let me just show you the asset details. So even if you make a lot of money in terms of sales and trade and you don't have assets, to us or to an accounting in accounting terms, it means that your business is not in good financial position. So it is used by financial institutions and investors to measure your credit worthiness. When you go to the bank, their interest, their biggest interest is not how much profit you made. It is how much, what's the worth of your business, what's the value of the assets you hold, because remember they'll be asking you for some collateral. So if you don't have any assets and the assets are reflected in the balance sheet, it means you cannot gain any credit from them. So this is because it holds the records of assets that can be disposed to recover your debts. That is, if you use it as collateral, or and it also reflects the magnitude of other financing services you have received from other institutions, because you reflect um, yeah, the amount of loan you have received, even if it's from different banks, this is where we reflect it and it shows the actual picture of what is happening or what you're using to fund your business so that you're able to trade. So it cautions them from investing their money in a business that has not been established and might fail to repay back their loans. These are the investors. If they say like you are into too much loans, you don't have assets, you have not established your business well. As much as your business idea might be very encouraging and very beautiful to them, they might fear investing in your business because they don't know whether they will be able to recover the money in case of anything, or even your business will be able to scale up and cover the magnitude of business that you'll attract in the market. It also shows investors your ability to scale your business and bring back profits so that they can recover their risk within the shortest time possible. Wow. So, as I said, part of the source documents or the accounts, ledger accounts will reflect in the balance sheet that show the value of your business. Part of it is the assets. These include the current assets. This can be converted into liquid cash flows within the shortest time possible. Or, for example, the credit sales and stocks, it's something that you can take and dispose within maybe some months or so. Then the current assets, they may take time to dispose in terms of cash flow crisis. For example, the land and equipment, but the assets category, all of them are very important when it comes to valuing the position of your business. Then we have some other ledger account, we call them the liabilities. This also has two categories, the current liabilities. This reflect business payments that need to be paid within a short period of time. For example, in a year's time, this will make people, for example, if you are attracting a certain investor, they want to know, if I come to this business, will I find people who are demanding a lot of repayment from me? Will I invest my money, and instead of us using it to generate more cash flows, more sales and everything, we are using the money to repay your debts that you had incurred, and we are in a crisis at the same time. So it's very important for them and even for the financial institutions. Then long-term liabilities, these are payments to financiers and which might take more than a year to repay. For example, the bank loans, and as I said before, they are interested to see where else have you taken loans to fund this business? Why have you not repaid? What's the duration of repayment? What's the magnitude? And it is of great interest to them because it determines the value and the position of your business as at that time. So the other part that we usually reflect in the balance sheet is the shareholders equity account, and this gives details of capital you initially used to start your business, and also the amount or retained earnings you have been able to reinvest back to the business within the period you have been in operation. And I'm going to discuss this maybe in a nutshell, that as I said before, the profit and loss account in most private businesses, it's not like it's usually even the reality what is reflected in the books. But unfortunately, when you tell maybe your auditor that I want to pay this amount of tax, and then they reflect like you made let's say like 5 million in terms of profit for the financial year, it means that some amount has to be set back so that it can be reflected in the balance sheet, like you reinvested into the business. Unfortunately, this is usually not true because the amount has already been consumed by you, the director. If we go back to the assets of the business, we don't see any asset that has been bought in the name of the business so that we can say that this is where the retained earnings are. We don't see any investment in terms of shares, in terms of all those things. So don't just get entertained by these terms that you have the books of account. And it usually interests me when we do audits and you give the business people the audited accounts and they just put them somewhere in a drawer, like they are putting them there in case the KRA people come along and they can be able to show them what has been happening. That is usually not the original intention of this account. They are meant for you to read through, to understand how your business is doing, to understand the value of your business. But now you see the reason you can't even trust them yourself because it is because you know the information there is not even true. It has been cooked, and the reason it was cooked is because you didn't have cash flow systems set up, you didn't have records, you didn't even yourself give an accountability of what happened or where you took the money that you withdrew from the bank. So you become the first person who is causing the business to go down because you are not accountable yourself and there is no one who is going to ask you any question with regard to that. So this is a dummy financial position or a balance sheet, and this is how we represent it. Now, the only thing I'll discuss in this one, I talked about the assets. According to this one, the assets, the total is 1,000. Then we usually combine the liabilities and the financed by part together because these are the it's like the loans or the sources that has funded us to be able to make the sales and the purchase the assets that we have made. Now, if you notice here, the totals are all 1,000. And this is what we call in accounting that the accounts have balanced. Yeah, you see, people usually feel like when they hear that some accountants are coming or they are doing some mathematics somewhere or some auditors are coming and they are like, eh, it's like the accounts refuse to balance. This is what we call balancing, because in those serious institutions, if you like you indicate retain the earnings here to be able to balance this account and you indicate 350 million, you have to have that amount somewhere. It has to be actual. It's not just a figure in their books. And that's why I said for us as SMEs, as private businesses especially, we use it as just a figure just to balance the books, but it's usually wrong. If you see these figures somewhere in your books, even if you don't have that money in your account, go back, sit down with yourself and ask yourself, where is this money? It was either consumed by you as the director, it was either consumed by your stakeholders, your employees, and everyone through the loopholes we have talked about in cash flows, or you have used it to buy and to finance your own personal things. Maybe you bought a personal ad, you bought yourself another new car model, you bought your, yeah, let me not go into deep into that because you know the things you do. So this is what happens. This is the money you use. So we indicate it in the account so that it can balance, but in actual sense, make sure you can be able to go back and reflect it and show us where the money is. So I know I've summarized this one, but let me just read through them. Points to note in a balance sheet that the asset section must be equal to the creditors and financing section put together. That is what we call balancing accounts. This is what they call balancing accounts since it's the last step while preparing the books of accounts professionally. Most SMEs have yeah, this is supposed to be retained earnings figure in their books that they can't show in actual life. I've talked about that. The profit in the trading account should not be most of your worry when doing business, but it usually is for most people. Rather, the financial position of your business should be your concern as it reflects whether you have the muscles to compete, grow your business, or meet a new opportunity in the market. And I'm going to talk about this right now. I'm going to say, most of us I know, we started businesses with the intention of making profits because everybody wants money. Even me, I want it actually. Uh, but the reality is, change your mindset. Stop focusing on profits and profits because even if you get all the money and you are not really investing back, you will not grow. So, as much as profits are good, sit down with yourself and think about that business that you're operating in 5 years to come or in 10 years to come. Where do you want it to be? So that when you get money, instead of using it in some not goods usages, I want to use the right words. Uh, make sure, make sure that you're using it for the right purpose, and that will be very fine for you. So, thank you very much. I'm going to edit right there. What I'm going to say is that we have basic business accounting skills trainings that go on a monthly basis. And the skills we teach is now how to do the records. If you don't know how to operate an Excel, um, the Excel worksheets, how to prepare. I'm surprised to be when I find people in cyber cafes and they are doing business, and I feel like asking them, why don't you just learn this skill? How to prepare an online invoice, how to operate a computer and get deeper into the systems, because it's something you can do, not because you need a certificate. You see, then the narrative we got was wrong when we went to school, because we were taught to pass exams. But now, where we are as business people, we are not learning so that we can pass exams. We are learning so that we can uh, we can operate our businesses in the right manner. So we have ongoing trainings where we teach how to operate things like QuickBooks, Excel, word processor, how to use it to publish and to make things like invoices, pro forma invoices, how to change documents from PDF to Word. I usually put business people when I see them requesting their employees to do this and this, but they don't even have the courage to tell them that I can't even do that myself. So it's usually a matter of concern for me, but yeah, we will get there. We will get there. We will get there. So if you want to um, register for the training, my details, all our details are still. Can share them here. Let's see. I didn't put on the flyer, but you can contact me directly on my number 0712. I know most of the people have it, or even all of us. 0966170712 The monthly trainings go for 20,000 for now, before we increase, because as we continue bringing in some more modules according to the demand of business people, and most people are saying, I need to learn how to do Excel, to learn Excel worksheets, I need to learn how to do reports, I need to understand what happens. These are the things that we keep improving because of the demand that we get. And so you can contact us for more information on that, and we'll be able to give you the direction. Thank you very much, and I hope this helps you to grow your business. Thank you.